Hello, fellow dividend investors. It's a new month, so it's a new list. Let's discover this month's dividend yielding stock picks. Before we continue, please like and subscribe. Also, leave comments if you don't agree with my method or you have any other ideas or suggestions. It's always welcome. So, last month I started a dividend investing plan, and to execute my plan, I built a custom stock screener that screens all stocks with a market cap of at least $10 billion, a healthy debt to equity ratio, and a profit that's larger than the paid out dividends. We also only allow stocks that haven't reduced or cut their dividend in the past 5 years. We then use a formula where we calculate how long it would take until we earned the original investment back with dividends or potential capital gains. Then, to execute my plan, I buy one stock every day from that list with a set amount. In this case, it's $50 a day. You can follow my entire journey on dividendexplorer.com and also download the preferred stock list for the month of May 2020. So let's discover the list. And if you're impatient, you can just download the entire list, like I said, on dividendexplorer.com. At number 10, we find a company called Corning with a dividend yield of about 3.5%. We already bought its stock in April. It dropped from position 7 last month to position number 10 because it will take about 4 more years to buy the stock when compared to the price it was at in April. But it's still in our top 10 and it's still one of the stocks that we will add to our portfolio. Corning is active in the production of glass surfaces, like the glass surface of your phone, of screens, but also in fiber optics and medical optical solutions. It's a healthy and mature company, so we expect it to continue paying out the dividend and growing that dividend like it did in the past few years. At number 9, we find Southwest Airlines. It's an airline that, unlike other airlines in this crisis, hasn't cut their dividend yet. So because they are still continuing to pay out their dividend, they haven't even cut it, it made the list. And since we follow our lists, we will buy Southwest Airlines. And it's probably a good pick if airline traffic picks up again at the same high levels as before the global pandemic. So let's hope so. But if it takes a longer time, it might take a while before we see the first actual dividends or dividends at the same level. So quite risky play. But since I will only allocate 1/20th of my capital to them, I won't lose my sleep over it. Number 8, we find some kind of real estate. It's a public storage, a company that rents self-storage to companies, and based on our calculation, it will take about 20 years to earn back our initial investments. So that looks quite good. Number 7 in our list is General Dynamics with a yield of almost 3%, but with historical yield growth. And according to our calculation, it will take about 19 years before we earn back that stock. General Dynamics is active in defense and aerospace. Their stock price, unfortunately, recently took a hit because of missed earnings. But they missed their earnings most probably because of the global pandemic. They have been missing earnings because of disruption of their jet delivery line. But after the pandemic, this will hopefully resume to normal levels. So let's hope we bought them at a good price. Number 5 and 6 are REITs. We have Realty Income and Welltower, both giving us a yield of over 5% and a potential earn back between 15 and 17 years. They seem to top the lists almost every month, so they are probably good and solid dividend yielding stock picks. In the fourth position, we find Tyson Foods. Their stock price has dropped quite dramatically the past few months because a lot of their plants have been closed due to the pandemic and might lead to shortages in the US meat supply. But there has been an executive order by President Trump to quickly reopen the facilities. I expect their business to pick up again once the whole illness affair is over. Taking into consideration past dividend growth, we will probably earn back the share price in 15 years. And if we would be reinvesting the dividends much earlier, of course. And finally, our top 3 picks based on their yield are 3 oil and gas infrastructure companies. At position number 3, we find the Canadian Natural Resource Limited company, a company that's supposed to bring a 6.5% yield, and we would earn it back in about 10 years. Its PE ratio is also absolutely low, only 5. The oil and gas industry, however, has been heavily hit by an oil price war, and secondly, a decimated demand for oil because the world came to a halt recently. Luckily, the income of these oil and pipeline companies are less affected by the oil price, short term that is, but in the long term they might lose their major customers that use their oil pipeline and storage facilities. Let's hope that this global lockdown is a one-off phenomenon and that the economy takes up quickly. Number 2 is Suncor, also active in oil and gas. But the main difference between the number 1 and number 3 is that Suncor produces and mines oil and gas. So it will be really affected by the oil price. Suncor can still sustain the payout of its dividends, but maybe it should cut it for now. Even Shell cut their dividends. But for now they haven't cut it, so they are still on our buy list. I'm only buying them because I only invest a small fraction in them. It's a very risky play, and the dividend probably isn't safe. And finally, the number 1 is Pembina Pipeline. It's also active in the oil and gas services. It came into the crisis in a very good financial position, and it probably has the capacities to survive it and even expand during this crisis. It's still a risky play, but it will maintain its dividend in the month of April. Our top 3 seems quite risky, but our plan reduces this risk heavily because we only invest $50 per company, and since we will buy about 20 stocks, not more than 20% can be categorized as being risky. Please share your opinions in the comment section and follow me and my journey to see how this will all turn out. For now, I can only say that the oil and gas stocks have been my best picks until now, but let's see what the future brings.